Hi, welcome fellow traders to Convert to Smart, and I'd like to take this opportunity to share my strategy with you today. It has worked for me and I hope it will work for you. It is quite simple to learn and understand. And my reason for sharing this strategy that has been making me money over the years is I like to contribute to society, and this is my contribution so that you can make money using the strategy that I have used. So, now without further ado, let's go into the, the webinar. Okay, so first we need to talk about our risk disclaimer, and I'll just quickly read that for you. Stock trading comes with a risk of loss and might not be suitable for everyone. You are likely to make gains as well as losses, and you should be sensible to that. You are responsible for all the risk you take regarding this strategy. That means I am not responsible for your losses or gains. You should only trade with money that you are willing to lose. And I know this did not sit right with me when I started trading, but everybody's saying it. There is some truth to this. Make sure all your bills are paid before you use the money to trade, because you just might not get it back when you first start trading. If you do not understand the risk, please seek advice before trading. Please do not use this video as an express promise or guarantee. This is only for information purpose, even though success is believed to be realizable. Your success is not guaranteed. Neither do I guarantee future success. Now, I want to talk about two of my favorite signals, and they are the pennant and the flags. And first, we're going to talk about the pennants. So, pennants are defined by Merriam-Webster as 1A, any of various nautical flags tapering usually to a point or swallowtail and used for identification or signaling. And 1B, a flag or banner longer in the fly than in the hoist, especially one that tapers to a point. Now, candlestick dictates all you need to know about what is happening in the market at any given time, and price action is the only trading I've made. And I've looked at other things and they just didn't work for me. So I'm just sticking to the one that's been making me money, and that's it for me. So some combination of candles sometimes group together to form a pennant or a flag. These formations will let you know who is winning in the trade, the bulls or the bear, and this will give you the signal to whether you want to go long or short. A point to note, there are times when candles will just move in a semi-straight line or just bounce around like a leapfrog. The candles will even sometimes go in a vertical move to the upside or downside without forming any recognizable patterns. So we're going to first look at the bullish pennant. And I hope this video is not too fast for you, but I just wanted to get those out of the way so I can spend some time here on the patterns and the candlestick patterns and what they form here in the pennant. So, as established, pennants are pointy flags right here. And this is my beloved, my most beloved training signal. It tells me without a shadow of a doubt what direction the trade is going to be in by the way it exits the trend line. The key thing though is patience. You need to wait until the formation is fully complete before getting into the trade. On this chart here, I've identified the signal, which is the green candle exiting the upper trend line here, my confirmation here, my entry, and my exit. Now let's talk about this a little. So my green candle is my first signal that this is going to be bullish. A red candle pull back, and it consolidates, and I love to see the consolidation. It consolidates, and what is even greater joy to me is that it's went over the VWAP, and this is the VWAP, and I'll talk about the VWAP in another video. So this is my VWAP. So the signals I use, as you can guess from here, is my Fibonacci. It's not fully shown here. Uh, my support and my resistance and my VWAP. So this is the signal, this is the confirmation, and here is my entry. It's above the VWAP. It's third candle. You can go second candle, but I like to see this all fully cleared. I get in here and I moved it upside to what this is my resistance line. So let's read. What you're looking at is a bullish pennant, and this is evident in the bullish candle exiting the pennant. When a bullish candle emerges first or breaks the trend line, followed by a bearish candle, which is then followed by a bullish candle, all you need to do is strap on your seatbelt and get ready to soar. So let's look at it on a longer scale or more wider scale. I love to see this when it's almost a flat line here, then the pennant is formed, the green candle emerges followed by a red pullback consolidation. It's right there above the VWAP. I'm sitting on my fib and I go all the way, baby, all the way. So that's just one example of the bullish pennant at its best. So let's look at the bearish pennant. So here is an example of a bearish pennant. You will see, as with the bullish pennant, there is a signal, a confirmation, an entry, and an exit. So this here on this chart, there's two entry points. So I have one entry point here and one entry point here. This is the safest entry point, but for I have been doing this for a long time, I can judge by this and look at the volume and see that this is for sure going to go back, because all I'm looking for is just a pullback, because once a red candle exit, I know this is going to the downside. So I see here the upper wick shows a pullback, and then the second pullback is the small green candle, which is the true and safest entry point in at this pullback. So you want to see a red candle breaking the trend line again, followed by a green candle, followed by a red consolidation, then down. So here we're looking at it on a longer scale. Again, straight line leading up, pennant, red line, pull back straight to the downside. Now, Penance Conclusion. There are times when the pennant is distinctive pre-market, but there are also times when you have to wait for the pennant to form after open. So I first use a daily chart to view the trade on a larger scale, and I try to push it to more than 1 year, as many years as possible, so that I can spot the major support and resistance lines. And the more they hit that specific price point, the more convinced I am that the stock will visit that price range again. I also use a 5-minute chart just to take out the hubbub of the market. I don't really look at the 1 minute and 2-minute chart, just to get a more recent view. So I use a 5-minute, and I just want to advise that you don't have to use my time frames, but when I use the daily and the 5-minute, the signals are more evident there. So, but it's up to you. There are also times though that I will check the 2-minute and the 15-minute, just to confirm my belief that this is actually my stock, because sometimes you look at it and on the 5-minute it is, but on the 2-minute it's not, and then you look at the 15 minutes and it's so you have to be sure that this is Sometimes you have to just use these time frames to confirm. But like you see prior, that they're pretty distinct when they show. So moving on, I find that if the pennant is not evident at pre-market or 5 minutes to open, then it is best to hold trading until it is formed on whichever ticker is the gainer or the top stock at the time. So my advice to you is to wait until the market shakes itself out, which is sometimes between 10 and 10:30, and see if any of the patterns become more apparent. Please be advised that there can be days when the pennants or flags are not evident. In that case, I don't trade. If, however, I see what is happening with the volume and the and I go down to the individual candlestick charting, I might sometimes chance a trade, but this is based on past experience. If I know a stock is a mover but it has not made my pennant or my flag, and I see everything else telling me that this is a go, I will chance a trade. But for new traders, I advise you to preserve your capital and only trade the safest strategies. So you wait on your pennant or your flags. If you don't see it, do not trade. So patterns are the safest way to trade because you are not gambling, but going off what the market is telling you and not on your own assumptions. But on the other hand, you might see, if you have more than one screens or you're looking at more than one, you might see more than one pennant formations. Just be careful not to be too greedy. Don't try to go into 4 or 5 different stocks at the same time. If you see the pennant or the flag forming on 1 or 2 or 3 chart, what you do is pick the best one and trade that one. Now let's talk about flags. So Wikipedia has the meaning of flags as most often rectangular or quadrilateral with a distinctive design and colors. It is used as a symbol, a signaling device. Now, what I love about trading flags is that they usually give great moves and are unmistakable. Usually they don't beat around the bush when they're ready to run. So personally, I find that unlike the pennant, there is only an exit and an entry. Well, entry and exit point. So each flag pattern will signal the direction it will be going, whether it be going bullish or bearish by the direction it exits the trend line. And of course, there are bullish and bearish flags, and we'll be exploring that. So here we're looking at a bullish flag. And you can note here the flag is completely formed. So on this chart, you will see that the flag is completely formed. The trend line is breached, and it signals who the winner is for this trade. In this case, the upper trend line is breached, thus signaling that it's a bullish run and I should go long. But I usually wait for a confirmation candle, and by that I mean the second green candle as noted here on the chart. I also like to see that the signal or the candlesticks are above the VWAP, and here is my VWAP. And then I use my technical analysis to let me know when to get out of the trade, meaning when it hits the next Fibonacci line or the prominent support and resistance line. In this case, it hit the fib line. I didn't have my support and resistance on this one. So here we have the entry, second candle. You can exit here on this first fib line, or you can just let it run, and there it hit the second fib line. So bearish flag. So like the bullish flag, when the trend line is breached, in this case the lower line, this shows that the bears are winning and the stock will be moving to the downside, thus signaling a short. I like to wait for the confirmation in the second candle again before entry. um, and I like to also see that the candlesticks are below the VWAP. So here you'll see the VWAP right here. So using my Fibonacci retracement as my exit signal, and it's not shown here, but that's what I use. I wait for the trade to hit and then get out. Or I will have my support and resistance line set and get out if it gets there. Now I do have a video on setting your Fibonacci, um, setting up, and I also have a video on setting your support and resistance line, so you can look out for that. So if you don't have your technical analysis, just look for, as shown here in the chart, your double bottom or long lower wick. Sometimes you'll see the red candle with a long lower wick. That's a signal for a reversal. So, but another signal, another secret I have as a signal is I wait for the stutter in the trend, like a car running out of gas, and use it as a signal to exit the trade. So you'll see it go down and then stutters here, and then you see it start going, then I know I should get out. Sometimes it may go further, but it's best to be safe than sorry. So, in conclusion, just wanted to point out one trader puts trading in a way that has stuck with me for a long time. He says, trading is the hardest way to make easy money. I say yes and no. Anything is easy if you know how to do it and love doing it. I think flying a plane is hard, but Chelsea Sully Sullenberger, flying is as easy as pie. He was the one that landed the plane in the Hudson River, saving everybody. So, but I couldn't do that. That's hard for me. But he loved flying and it was easy for him. I love trading and now it's easy for me. And if you love trading, it will be easy for you. So, what you need to do is face your challenges and love what you do. Welcome the challenges because overcoming them is how you grow. And it'll help you to stay interested and stay above the crowd. And trading is actually easy money. So, like everything else, you have to be patient with yourself. Take each challenge as a sign to improve on what you're doing, or use it as a signal to change your strategy because you may be going about this all wrong. Learn something new about trading every day, and most of all, stay calm. That for me was the hardest thing, and sometimes it is. But as another author wrote, when trading, someone should look at you and not know if you've made or lost money. Until you get to that point, you have to be very careful with your emotions and your equity. In utilizing my trading style, you may not be able to spot the pennants or flags immediately, but keep at it, and I promise you will. And I also promise it's one of the safest way to trade and to make money. Learn and adjust yourself and not just your trading habits. So, with that, I wish you happy trading and enjoy the ride to profit. And I welcome you to email me at converttosmart@yahoo.com. Again, that's converttosmart, CONVERTTOSMART @yahoo.com with any comments. And please subscribe and like, and look out for my other videos on support and resistance, Fibonacci, and VWAP. Happy trading, guys. Goodbye.